Next chapter is what? Mutual funds. Okay. Equity valuation is discussed in dividend policy, is discussed in equity valuation also, and to some extent in portfolio chapter also. Can I present or not? Now, give the heading mutual funds. Give the heading mutual funds. Learning objectives. Stop talking, please. Today, minimum have to complete at least 5 sums before I will not leave you. Okay, now. Mutual funds, learning objectives. Don't talk. Point number 1. Calculation of NAV is also a very simple chapter. Not so much difficult concept to be discussed. Okay, point number 1. Calculation of NAV. NAV. Bracket, what is NAV? Net asset value. Calculation of NAV. Bracket, right? Net asset value. Point number 2. Calculation of return or yield from mutual fund. Calculation of return or yield from mutual fund. Calculation of return or yield from mutual fund. Point number 3. Point number 3. Different types of mutual fund schemes. Different types of mutual fund schemes based on income distribution. Different types of mutual fund schemes based on income distribution. Different types of mutual fund schemes based on income distribution. A. That right? A. Dividend plan. Dividend plan. B. Dividend reinvestment plan. Dividend reinvestment plan. Let it be there. You stop shouting. Can I proceed? C. Growth plan. C. Growth plan. D. Bonus plan. D. Bonus plan. D is bonus plan. Point number 3 or 4? 4. SIP. Point number 4 is SIP. SIP expansion is systematic investment plan. SIP in bracket right, systematic investment plan. SIP, systematic investment plan. This is point number 4 now. Okay, next point number 5. Point number 5. Performance measures in mutual funds. Point number 5. Performance measures in mutual funds. Performance measures in mutual funds. Is that right? A. Sharp index. A. Sharp index. Don't get afraid. That is not here. Okay. Sharp index. B. Trainer ratio. TREYNOR. Trainer ratio. B is trainer ratio. C. Jensen's alpha. Jason Lava, Jensen's alpha. JENSCN. Okay, Jensen's alpha. C is Jensen's alpha. 2 or 3 more there, not relevant. These are the 3 measures. Can I go say? Next. Point number 4 or 5? Point number 6. Point number 6. Portfolio strategies. Portfolio strategies. Portfolio strategies. Buy and hold. Constant ratio plan. Point A, buy and hold. Point B is constant ratio plan. Constant ratio plan. And point C is constant proportion portfolio insurance. Constant proportion portfolio insurance. Constant proportion portfolio insurance. One sum is there in RTP which will be doing constant proportion portfolio insurance. Last point, point number 7. Your return versus mutual fund return. Point 7. Your return versus mutual fund return. Your return versus mutual fund return. Your return versus mutual fund return. Okay, can I proceed now? See. Let's have an introduction to this mutual fund. Little bit fairly long introduction, but once we complete, in 3 hours all problems can be completed. It will not take more time to complete the sums, only introduction is a little bit longer. Most of you should also be aware about the mutual funds, but still I don't want to take any chance. I'll give a brief introduction and then start with the problems. Okay, please. Shh. Can we start now, please? Notes I am not going to give for introduction. It is already given to you. Correct? I gave you one set mergers and valuation. I gave you one mutual funds. I think one more chapter has been given along with it has been given. Can I proceed or not now? Please. First of all, I want to do a banking business. I also want to do a software. I also want to enter into iron and steel. I want to also do what? Pharma business. All business I want to do. Tell me, possible? In olden days, it was not possible. Neither a person will be what? A trader. A person will be what? A manufacturer or a goldsmith. Yes or no? Yes or no? No. Each person does his own business. He cannot do multiple business. He should be having multiple expertise. Yes or no? No. In today's world, we can do all the business. I can buy an Axis Bank share. I can buy what? A TCS share. I can buy a Ranbaxy share. I can buy what? An SBA share. And then go for all this multiple business or not? So what happens is, I can do multiple business by becoming shareholders of company which are doing those business. Right or not? In that case, see what is happening. I am not doing the business. I am doing it through an agent. The agent is a board of directors of the company. Everybody following or not now? I am not doing this business. I don't need to have expertise regarding banks. I need not know what is NPA. I need not do I need not know Basel II, everything, nothing I need to know. I can only know deposit, borrowing, that's all. Still I can be a shareholder of a banking business. Right or not? Now, I need not know the business. It is enough if I have some money to invest, I invest in the company share and engage in those business. Everybody, are you following what I am saying? Now, this is what we call a concept of what? Agency, where the company is acting as an agent and doing all the projects related to that particular business. Yes or no? No. So what happens is, I invest my money in the company invests in what? The business or the project. Yes or no? I invest the money in an automobile sector and they open what? A new car plant and start earning profit. Give it to me. Respond. Yes or no? This is what is happening in the shares. So what happens? A company is formed means I'll be giving the money to the company. The company gives me what? Share. The company gives me what? Share. And my money, the company what? Invest. It invests in what? Projects. It invests in projects. And the project gives what? Return. From the return I'll be getting what? The amount, either as dividend or in what? Growth in share price is what normally happens to any investor in the market. Respond. Yes or no? Now, this they take a step further. They take one a step further. Now, investing in a share itself has become very difficult. Because investing in a project is very, very difficult. But investing in share also is what? Very difficult. The reason is, we have seen so many hedging strategies done. Yes or no? People are say beta and they calculate what? Index models. So many. It become what? An expert thing to invest in what? Shares. I am a layman. If I enter into a share market, I may make a gain or loss. I don't have that expertise to what? Analyze stock and make investment. So investing in investment they become difficult. Yes or no? Now share itself is what? A derivative only. It is assumed from what? Project. Now investment in share is not possible for the person due to lack of time, due to lack of what? Expertise, due to lack of will. Because I want to diversify fully. I want to what? Diversify fully. But to diversify into all the 50 stocks in Nifty, I require crores of rupees. Lord says that I cannot buy all the shares. There's a money problem, there's an expertise problem, there's a time problem. I cannot say track what all the shares. I don't know when to buy, when to sell. All this becomes a difficulty or not. So what we do is we give our money to an agent. We give money to what? An agent. The agent is called as what? Mutual fund. They are going to do the investment for us. Are you following what I am saying? They call us what? Fund manager. They're going to do the investment for us. How I give the money to Axis Bank to do a banking business? I give the money to what? The mutual fund to do what? Investment business. They invest money, earn profits for me, give me the amount. Everybody yes or no? In that case, when I give the money to shares company, they give me what? Share. Rather, when I give the money to a mutual fund, they also give me what? Shares. That shares we call as what? Units. We call as what? Units. Units are nothing but what? Something similar to or almost same as what? Shares only. Just to differentiate, I call it as what? Units. In US and all, they also call that also as what? Shares of mutual fund. Everybody follow what I am saying now? So companies invest in projects, mutual fund invest in what? Companies. Are you follow what I am saying? This is the concept of mutual fund. Okay, now if we see, there is an investor. There is one investor. The investor invests money in what? Mutual fund. The mutual fund invests money in what? Securities. The securities give what? Return. Will be given back to what? Investor. When the investor invests money in mutual fund, it will be allotted back what? Units. This is the basic mutual fund business. Are you following or not? I don't want to go into legal intricacies for all the persons involved. It is highly theoretical. I given that in the notes. If we have time, we'll discuss in what? Next class. Do you understand the business of the mutual fund or not? No. So this is the point number 1. Can I go to the next point or not? Now, see. Mutual fund, like any company, will be having a balance sheet or not? Now, this mutual fund is a trust. It is what? A trust. Because they accept fund from the public and they invest as a trustee. They invest in what? Trust. The beneficiary is what? The unit holder. The shareholders are the unit holders are beneficiaries. The mutual fund should not operate for its own profit. It is operating for what? The benefit of the unit holders. So all mutual funds are nothing but what? Trust, which is created under the Trust Act. Are you following what I am saying? And the mutual fund accept money interest for the unit holders, invest as per the schemes which is promised, and then generate return and then give it to the unit holders. Everybody understanding the position of the mutual fund or not? Now, see. To understand, it is going to have a balance sheet. It is going to have a balance sheet. First of all, it is going to receive what? Fund. It is going to receive what? Fund. From the general public. From the general public, it is going to receive the fund. For the fund given is like an IPO. You issue shares and get money through share issue or not. Like that, they issue units and get the money from the public. This is what we call as a fund. Okay, now, for this money got, they should be giving something back or not. What they give? They give the public what? Units. Give the public units. This money has been obtained or not? What to do? Put in pocket. This money has to be what? Invested. It has to be what? Invested. It has to be invested in securities. So many varieties of investment opportunities are available in today's market. So no, now they can invest in what? Stocks. Invest in what? Stocks of companies. They can invest in what? Bonds. They can invest in what? Government of India, municipal bonds, etc. We call as gilt-edged securities. So no. Even some funds invest in what? Gold. They can invest in what? Gold. Like that. So many varieties of investment portfolios are available for the mutual fund to invest. For mutual fund to invest. Okay. Now, can they invest as they wish? No. Because the investment they are bound by the prospectus. By what? Prospectus. When I get the money from you, I am the fund, you are the money giver now. When I get the money from you, I will say how I am going to invest. I will say what? How I am going to invest. Is it an equity fund? Equity fund means what? I plainly say that I am going to invest in what? Shares. When I am saying income funds are debt funds. I am saying I am going to invest in what? Bonds. I cannot get the money from you saying that I am getting from you for debt fund and invest in what share. It is violation. It's going to be what a violation. Trustees will be there. Independent trustees will be what there to check whether you are as per what doing the business as per the prospectus is given to the investors. Are you following what I am saying? So the money which is received will be invested as per the guidelines which you are promised to what the investors. So you at the time of getting money itself want to specify how the money is going to be utilized. But in which shares and all is your discretion, the only expertise comes into picture. Everybody are really following what I am saying? No. So the money is obtained and invest in what? So many assets. Okay, can I proceed or not? Now, where to invest is dependent on the scheme that is promised to the shareholders. Can I go to the next step or not? No. Types of mutual funds we'll discuss in the next class as a theory. Can I proceed? Now, next is. The money is received. The money has been what? Invested. Now, what happens? Always investment generates return or not? There are 3 returns which is generated by the investment. Okay. The 3 returns are, one is dividend or interest. I invest in stocks, the mutual fund invest in what? Bonds, etc. The company, the fund has invested in Reliance, Reliance declared dividend, mutual fund gets it. It invest in what? Government of India bond, it pays coupon, gets what? Interest. So when the mutual fund makes investment, the investment will give me what? Return in form of what? Dividend or interest that will be credited to the P&L account of the mutual fund. Respond yes or no. Apart from that, the next is called as realized capital gain. This is called as what? Realized capital gain. I bought a Reliance share for, I bought a TCA share for 1,800. Now trading at what? 2,200. I sold it, book a profit of what? 400. I realized in cash. That is also income for the fund or not? It is a capital gain. Be credited to what? The P&L account. It is called as realized capital gain. Yes or no? Apart from that, I purchased the TCA shares for 1,800. I have not yet sold. It is in the balance sheet for how much rupees here? 2,200. Now the value of my investment increases or not? It has not been sold, but the value has what? Increased. That's called as what? Unrealized capital gain, or the 3 types of incomes the mutual fund can say earn. Yes or no? No. Very simple. Yeah? I invested in all these securities or not? All the securities will give me dividend, will give me interest, will be there in the P&L account credit. All these securities value might have appreciated. Might have what? Appreciated. When the value appreciates, I might have sold. Yes or no? In this year, I have bought a share for 1,800 and sold for what? 2,200. 400 profit or not? Profit on sale of investment. That is going to be what? Another income which I call as what? Realized capital gain. Third is, I bought a share for 1,800, not that sold. Still what? With me only. But now its value is what? 2,200. This balance sheet has an increased value called as what? The unrealized capital gain. These are the 3 types of incomes the mutual fund can generate for its fund holder. Everybody up to this? Are you following up? Now, I am now only discussing from the problem angle. More detail will be discussed in the next class. Can I proceed further? Now, so with this, I move to the next concept called as NAV. Concept called as what? NAV. Okay, that's very important to understand the return to the mutual fund unit holder. Can I proceed on that? Now, this is what the mutual fund earns and what it gives to unit holder decided through what? The NAV. Can I proceed on that? Now, next is mutual fund every day calculates something called as NAV. It calculates what? NAV every day. It should be calculated, reported in the press. Reported in what? Press. Okay. You can see it in the websites. Money Control will be giving what? All the NAVs of all mutual funds in newspapers and so on. They have to calculate NAV daily and report. What is that NAV? Very simple. NAV means every day the mutual fund assumes that it is going to be closed on that day. The fund is going to be liquidated, wound up on that day. Today, if I wind up the mutual fund, what I will get? I have to see. Then divided by what? Number of units gives the value per unit. Are you following what I am saying? No. Today evening, the world is going to die. People said, what happens here? The mutual fund want to close everything, declare everything to what? The unit holders. Okay, in that case, when I want to wind up the fund today, and then I calculate what? Value. The value is called as what? Net asset value. Respond yes or no? Now, how it is calculated? Very simple. Mutual fund at the end of the day will be having so many investments or not. It may invest some money in shares, some invest money in what? Bonds, some money in what? Gold. Or gold you leave it as a separate fund. Okay. So it may invest some money in what? Government of India bond. Some money may be as what? Cash also. Yes or no? Liquid assets. So many instruments and assets are there. What happens is all these assets should be having a value today or not. So the market value of the assets, the today's value of what? Market value of the assets should be taken from the market. That is, if I sell all this today, I'll sell at the book value, market value of market value. Take the market value of the assets, and from that market value of the asset, what I should do? Reduce any outside liability I have to pay, something similar to net worth only. Are you following what I'm saying? What are all the outside liability that may be payable here? I may be having some salaries payable to the employees in the mutual fund, that may be what? Outside liability and so on. So I have to reduce what? All the outside liability. What is balance debt is called as what? Net asset value. That you divided by what? Number of units. You see NAV per unit. Everybody up to this, are you following? Able to hear me properly? Yes or no? Volume reduced? Shall I proceed? Able to hear or not? Able to hear me or not? Okay. Now, see, when I do the net asset valuation, see, what happens is, there are some guidelines SEBI has given to value the assets. I should not unnecessarily overvalue the assets. Yes or no? No. How the asset value should be taken, a guideline has been given by the SEBI for this purpose. Now, broadly let us discuss, it may be used in the problem. Okay, see. Mutual fund can invest as follows. It has invested in listed securities. In what security? Listed security. Invested in what? Unlisted security. Security means I say shares. Invested in listed bond. Invested in what? Unlisted bond. Are you following what I am saying? It has also invested in the Government of India securities. It is having what? Cash and other liquid securities. Like this, so many assets it has been now investing. Can I put or not? No. All this, how to value? What they say is, all listed instruments value at the market price. The instruments are traded in the stock market. Take the listed shares, it is going to have a day end price or not. So multiply by the share price. Okay. Listed securities, whether it is bond or share, should be valued at what value? The current market value. Everybody following or not? No. Next is unlisted security. Next is what? Unlisted security. Suppose there's an unlisted bond. That is what? Unlisted bond. How to value unlisted bond? They don't have a market price. They don't have what? Market price. How to do it? They say two options. Fair value or book value. What are two values here? Fair value or book value. Whichever is lower. What should be taken here? Fair value or book value. Whichever is what? Lower. Suppose I purchase a bond at a price of 1,000. How much price is 1,000? Now, everywhere the yield has what? Increase. The yield has what? Increase. My bond is giving what? Less coupon. In that case, its fair will be 1,000, less than 1,000, less than 1,000. Now, in that case, the bond will be only worth what? 800 or 700. In that case, don't write in the balance sheet 1,000 just because you are just having what? A book value is now real value is only how much? 800. Go for a fair value. Fair value is the present value of the future cash flow. Respond yes or no? No. So if the book value is 1,000 and fair value is 1,500, don't value 1,500 because it does not have an immediate market. I can go for the market value when there is a market for that. This is an unlisted bond here. Unlisted bond, don't go for what? Fair value is going to be higher than what? Book value. So go for fair value or book value, which is what? Less. Same way, one have to go for what? Shares also, equity shares also. Unlisted company shares don't trade in the stock market. In that case, how to value the share? There's a book value of the share which has been invested. And there's another value called as what? Fair value, which can be an intrinsic value or based on PE, I can unvalue, say value what? The unlisted company also, based on suitable adjustment, whichever is what? Lower, should be taken for the valuation of share. Everybody following not? So, listed component, that is listed security, should be valued at what price? Market price. And unlisted at what? Fair value. I don't know. Now, Government of India bond is normally traded at what value? Par value. And there are two types of bonds. One that is freely traded to all public, another is traded within what? Banks and so on. In such case, see the value properly and take the fair value or market value, which is going to be less in this case also. Everybody following not? No. And cash equivalents should be always valued at the book value only. They don't have anything called as a fair value. Yes, sir, one should take the values of the securities while calculating the NAV. Everybody are you understanding or not? No. This is the NAV calculation. From this reduce what? Outside liabilities and getting the net asset value of the mutual fund. Can I proceed further or not? No. Why this NAV should be calculated? Next issue, understand what is the meaning of a net asset value. Can I proceed or not? Now, let's see the flow. Mutual fund gets the money from what? Investors, public, allows them what? Units. The money is invested in the securities. Point number 1. Yes or no? The investment is made based on the schemes that are promised. Every day, the mutual fund assumes itself to be closed and values all its assets based on the current value or the fair value and reduce all the liability. The net only equals net worth or what? Net asset value, which is divided by what? Number of units to get NAV per unit. This is point number 2. Yes or no? And the mutual fund earns 3 incomes: dividend and interest from investment, realized capital gain and unrealized capital gain, which shows in the increased NAV. Everybody, are you following what I am saying? Now, this is the point that has been discussed. Can I proceed above? Now, next is, why should we know NAV? Why should we know what? NAV. NAV is similar to share price. It is similar to what? Share price. Are you following what I am saying? So, why should we know NAV? NAV should be known to calculate the return for the unit holders. And number 2 is to know how many units should be allotted when they purchase, how many should be what? Given back when they redeem. Also will be based only on what? NAV. So to know the use of NAV, I should know some types of mutual funds. Are you following what I am saying? Now, all this discussion, I am not discussing theory, I am discussing what? Relevant background for doing a problem later. Can I proceed or not? Now, so how the NAV is going to be used? Why should we have what? NAV is that is to be understood when we discuss the types of mutual fund. Can I proceed or not? Now, mutual fund can be classified broadly into 3 types. How many types here? 3 types. One is close-ended fund. One is what? Close-ended fund. Another is what? Open-ended fund. Third is exchange-traded fund, ETFs. Okay. This I will discuss in the next class. I will give a separate notes also. A very interesting discussion. Intricacies are involved. This has now slowly becoming what? Very popular to the other 2 funds. It is called as what? Exchange traded fund. Modus operandi very interesting and difficult. Okay. We will discuss in the next class ETF. Mainly the 2 funds are what? Close-ended and open-ended fund. We will be discussing in the problems predominantly. Can I proceed or not? Now, the 3 types of fund: close-ended fund, open-ended fund, and then what? Exchange or traded fund. Can I start or not? Now, what is a close-ended mutual fund? It is working similar to a company. Working what? Similar to a company. I'll ask you one question. Company goes for an IPO. Company goes for what? IPO. Suppose as an IPO of Axis Bank, you buy the Axis Bank shares. Okay. Now the next question is, will the company give back the share? The company will not redeem the share. It will be always with what? Company. If you don't want to be the shareholder, result to what? The outsider. Respond yes or no? No. The Axis Bank share will be always constant. Increasing or decreasing or always constant. The number of share is what? Always constant. It only changes hands. Everybody yes or no? Like that only close-ended funds also operates. Okay. Now, generally, a close-ended mutual fund will be having a life. Will be having what? Life. They say this is a 10-year mutual fund. This is what? 7-year mutual fund. Like that will be having what? Life. Okay. When the fund is announced, when the fund is what? Announced or created, they say I am going to start a 10-year close-ended mutual fund. Everybody following or not? Yeah, now. And when I want to start a mutual fund, first I have to issue units or not. So what happens? The fund issues what? Units through what? IPO. Issue units through what? IPO at some face value. Okay. Now say 1 crore units at what? 10 rupees. They may raise what? 10 crores. One small example. Everybody has no? Now. So what happens is you are all the investors. I am the mutual fund. You give me what? 10 crores. I allot what? 1 crore units to you. Respond yes or no? Now. That's all. Now what happens is, you are 10 crores, I'll start investing. I'll start investing and I'll be investing this for how many years? Yeah, around 10 years, I'll do this investment activity for you. Everybody, yes or no? No. So in closed-ended fund, you give me 10 crore rupees, I give you what? 1 crore units, and what happens? You are 10 crores, I'll start making the investment. Okay. If I'm making good investments, what happens? Your NA will be automatically what? Increasing. I'll give you dividend in between from the earnings and so on. And it is like a shareholder of any other company. Company invests in what? Projects. I invest in what? Companies and generate returns for you. Respond, yes or no? No. Tomorrow you say, no, I don't want to be in Rajagopal mutual fund, very bad investor, always NAV is what? Dropping, I want to get out. For example, okay, in the case, tell me, can you come out or not? You cannot sell to me. You cannot want to sell to me because this is a closed-ended fund. That's what I'm saying. Now, if you want to come out, you have to sell the units to what? Some other party. You have to sell the units to what? Some other party. Respond, yes or no? No. So the redemption is not possible. Redemption is not what? Possible. It is only going to be in a secondary market. Like how I buy the shares. If you don't like to be a TCS shareholder, what I can do? Sell the shares to another party or not. Like that. It's going to be traded in what? Exchange the units. Everybody follow what I'm saying? No. So here, SEBI said that the investors of closed-ended fund are locking themselves. They should be given liquidity compulsorily. SEBI regulation, they should be given liquidity what? Compulsorily. So the closed-ended funds should do one of the two things compulsorily, not both, one of the two things compulsorily. One is list their units in what? Stock exchange. Go to NSE and list your mutual fund units. Or go to BAC, list your what? Mutual fund units. How the company compulsory listing require? Company no need to list what? Compulsorily. If you are a private company, no need to list, yes or no? Public company also no need to go for what? Listing. It is going to be what? A choice, yes or no? But closed-ended fund should compulsorily go for what? Listing with a stock exchange, because the investors, when they want, they have no option to what? Get out other than what? Selling in the open market. So we cannot sell unless you have what? Exchange listed. So they have to compel list in what? Stock exchange is one option. Now, otherwise, if you are not willing to get yourself listed in what? Stock exchange, then they said in the given period, that is 10 years period, in the given period, they should give a plan. They should give what? A plan for periodic redemption. For what? Periodic redemption. They say 10 years, 2nd year, 5th year, 7th year, 9th year, I'll redeem. What I'm saying? Everybody are real fun. What I'm saying, that is, they have to give what? A plan for a periodic redemption, and at the end of 2nd year, the mutual fund will what? Buy the units from you at the particular days NAV. Everybody follow what I'm saying? At the end of 7th year, they buy the units from you at the given dates, NAV and so on. So there are two options. The fund has been given by the SEBI. Either you go for a closed-ended fund and list your units in what? Stock exchange. If you want to hold the units, hold it. I sell it to what? Some other person in the secondary market is one option. If you don't list, the unit holder has got no other go apart from staying there for 10 years or not. That is not liked by SEBI, because you are not investing in a business, investing in what? An investment only. Yes or no? In that case, the SEBI says you give a redemption plan. On that date, they can just what? Redeem their units. Or the two options given for the closed-ended fund. In that case, tell me, in closed-ended fund, the units will not be redeemed. No fresh units will be issued. It is a closed fund that operates for what? 10 years and should be mostly will be listed in what? Stock exchanges. Otherwise, they go for a partial redemption on a phased out manner, and this is rarity, and this is what most widely followed by the mutual funds. This is number one. Call us what fund here? Closed-ended fund. Right or not? No. Next is what fund? Open-ended fund. This is more popular. This is what generally happens in most of the mutual funds, open-ended fund. In open-ended fund, what happens is, today I am starting a mutual fund. We are starting a mutual fund. I am issuing, simple calculation, 10,000 units. All IPO issued here, 10,000 units I issue, and I am going to get how much rupees? Suppose 1 lakh. 10 rupees per can be issued. I am going to get how much rupees here? 1 lakh. This will make investment in what? All the securities. Everybody following or not? No. Next. At the end of the day, I will be having a NAV or not? What NAV is? Securities value divided by what? Number of units. I have the NAV. Suppose today the NAV become how much rupees there? 11 rupees. How much rupees? 11 rupees. Tomorrow morning the fund opens. The fund opens. Okay. Another is a new party comes and say IPO over. Tomorrow the fund opens. I go to the mutual fund, say, I give you a check of 1,10,000 rupees. I want to invest how much rupees? 1,10,000 rupees. Please allot me some units. Will they allot or not? Yes. They accept my check and divided by the current NAV, it becomes how many units here? 10,000 units. It allots another 10,000 units. Yes or no? Now tell me, the number of units will be how many units here? That is 20,000. Respond yes or no what I am saying? No. On the same day, another person says, I have 3,000 units, I don't want it, give me the money back. Yes or no? What they do, they take 3,000 units, multiply by what? The NAV level, they give how much back? 30,000 cash. The number of units becomes what? 20 minus 3 becomes what? 17,000. So daily, the units will be what? Going up and down because some will redeem and some will want to buy new units. The units are bought and sold, not with the third party, with what? The fund house itself. Respond. Are you following what I am saying? Such a scheme, we call it what scheme here? Open-ended scheme. In open-ended scheme, the units are constant, fluctuating. If there's a boom in market, Sensex and all improving means, people start investing in what? Mutual funds more. The fund holder gets what? More money to invest and the number of units increases. So no. If there's a dull in the market, people start what? Liquidating their portion, they start selling what? Units. They sell the shares and give the money back. Everybody, yes or no? In such case, the units will be what? Decreasing. There's going to be an increase in units, decrease in units in case of an open-ended fund, and the units will be purchased or redeemed by the mutual fund at what? At the current day NAV. They publish the NAV on daily basis. Everybody, yes or no? And intraday trading will not be taking place. I can redeem and sell only once a day. So, what I'm saying? That is, today they'll be buying and selling to me at the yesterday's end NAV. Tomorrow they'll be buying and selling at what? Today's end NAV and so on. They'll be buying and selling at the NAV. The fund house itself will be what? Buying and selling. Everybody yes or no? And some fund houses may be asking for a period of 2 days or what? 3 days to do the transaction because they have the money blocked in what? Securities. They have to sell and give you the money. Everybody following what I am saying? In such case, the mutual fund will be operating as an open-ended fund. For this, no need to list in stock exchange. The reason is what? The units are bought and sold with the fund itself straight away and not with what? The third party. Everybody yes or no? Is an open-ended fund. Third fund is called as exchange traded fund. A very new concept but a very interesting one. I will not discuss that now. It will be too complicated. I will discuss in the next class. Once you do number of problems in what? Mutual funds. Everybody following on now. These are the fund types. Various types of mutual funds. Namely open-ended fund and then closed-ended fund. Closed-ended fund are traded in what? Stock exchange. And open-ended fund I want to buy and sell with the fund house itself. Closed-ended fund, the number of units change will not change. And open-ended will be changing or not? Yes, it will change. And open-ended fund only, NAV is very important. Why NAV is very important? Because the fund house buys or sells to me only at what? NAV. What the fund house may do is, they may buy from me at what? Yeah? Lower NAV and sell to me at what? Higher NAV. They can earn a spread also that which they call as what? Loading which may take place. SEBI has put a lot of lid on what? The percentage on loading etc. But still this is how the mutual fund is going to buy and sell at the NAV. Right or not? Now, open-ended fund, NAV daily reporting not required. Is what? Not required because the public is trading. So the price at which I buy and sell the units depends on demand supply. Depends on what? Demand supply. More demand, price increases. Less demand, what? Price decreases for closed-ended fund. But they have a what I say? Yeah, customer reporting NAV. Weekly NAVs will be what? Reported. Every week will be reporting the NAV. But open-ended fund daily NAV should be reported. Is the next issue. Everybody, are you following what I am saying? So now I am discussing all this for doing problems. Once this discussion is over, you will be finding it very comfortable in what? Doing all the problems in the mutual funds. Okay. Now, what has been discussed is mutual fund accepts what? Money from the public. Allots what? Units. The money is invested in what? Securities. What the fund earns here? Dividend interest. Profit or loss on sale of security, also one unrealized capital gain. So no, now every day the mutual fund bill is going to be wound up on the day and calculation number called as one? NAV, where the securities are valued at the current value, market value in case of listed securities, fair value, book value in case of unlisted, which is going to be less, and cash and other equivalents going to be at the book values. knock off outside liability divided by number of units gives you what? NAV per unit. Open-ended fund is going to issue new units to you or buy units from you at what? The given day end NAV. Yes or no? The close-ended fund will not have units fluctuating. They will be always having what? Constant number of units, like a company only. If you want to buy and sell in what? Secondary market in the stock exchange. So SEBI says there should be compulsorily what? Listed. If you don't list, then you have to what? Redeem. If not daily, at a periodical interval, that should be given to the unit holders in well in advance. Everybody, are you following what I am saying now? Last point before you start doing the problems. Okay, see. What is a return you get from a share? You hold a share, na? What return you get from a share? It's on portfolio, no? What is return from the share here? Return from the share is equal to dividend plus P1 minus P0 divided by P0 into 100. Correct? No. You get some return as dividend. Balance is what? Capital gain or capital loss divided by what? Year beginning price. Gives a share return. You sign portfolio. Units also like shares or not? Same way. Okay. What return from the unit? The mutual fund gives me dividend. Company earns from project gives me dividend. Fund earns me what? Through investment gives me what? Dividend. It gives me dividend in cash plus NAV1 minus NAV0. That's the year and NAV, year beginning. Is the appreciation in what? The unit value. So no. Now, divided by what? NAV0 is going to be the holding period return for what? A mutual fund units. Response is or no. So the units can give me dividend. Also appreciation in what? NAV divided by the NAV0 gives a return of the mutual fund. Everybody is or no? No. The fund gives me dividend or not? The dividend given by the fund can be of two types. Dividend given out of dividend and interest. Now they earn money through what? Dividend and interest. Dividend given out of what? Dividend and interest. Dividend given out of what? Realized capital gains. That is, mutual fund income statement credits will be having two incomes. One is what? They make investment, they receive what? Dividends, interest, etc. They also buy and sell investment. They will be having what? Profit or loss on sales. So no. No. The capital gain realized, also what? Dividend. These are two income from which the dividend can be distributed. Response is or no. In our country, both are having the same treatment. Whatever money they can earn, they give me what? Dividend only. For me it is dividend exempt from tax. Everybody is or no. But in other countries, they differentiate between what? These two. They have a separate treatment for that portion of dividend declared out of what? The earnings income, and that portion declared out of what? Realized capital gains. For us, no need to have any worry at all. Both are what? Dividends only. Whether you give it from the profit on sale of shares or whether you give it from what? Dividend from share. For me, both are what? Dividend only. It is exempt from tax. Everybody, are you following what I am saying? So this is regarding the income from the mutual fund. So this dividend plus what? The appreciation in NAV. The appreciation in NAV takes care of realized capital gain. So sorry? And takes care of unrealized capital gain. In a realized capital gain, dividend and interest goes to P&L account credit side. So no. No. But appreciation in say the security value not shown in what? P&L will be shown in what? Balance sheet by of what? NAV increase. Ultimately all the three will be considered in the numerator while calculating the yield to the investor. Is a return from the mutual fund for the investor. Response is so no. So now we have two sets of problems to do. Number one, NAV calculation problem. Point number one. Point number two is how to calculate yield to the investor. Other learning objective number one, learning objective number two, for which broadly discuss what is an NAV, what is a yield. NAV is the value of all assets minus outside liability by number of units. What is yield? Dividend from the mutual fund plus NAV1 minus NAV0 divided by NAV0. Broad discussion. More intricacies can be seen when I start doing the problems in this regard. I given you the discussion for the first two segments to be understood, namely the learning objective number one and the number two. Everybody, are you following or not? No. So now, what is the time here? 8:55. We have to do minimum 4 problems before what? 9:15. Can I start or not? No. 5 here reduced to what? 4. Can I say? Don't reduce to 3, 2 and 1 later. Can I start or not? No. Very simple and easy problems. Now, no notes I am going to give. I discussed lot of things. Already given notes. Some more extra notes I'll be giving in the next class. I think I have to give the notes for the relative evaluation. Apart from that, I'll be giving you this also. Can I proceed or not? Now, please. Take question number 4. Please take question number 4. Shall I start now, please? Did you understand the sequence of introduction fully or not? Now, rather than elaborating what is mutual fund, how they get money, allot units, what is NAV, please, how NAV is used by a open-ended fund, and how return can be calculated, are the issue which has been discussed in this chapter till now. Okay, now we have to complete question number 4, question number 6, question number 7, and question number 3 or question number 5 immediately. Please take question number 4. You should not take more than 2 minutes to solve this. Take question number 4, please. For the exam question, whether you believe or not, that is study material. Okay. Following particulars are available for a scheme of mutual fund. Calculate the current NAV of each of the unit of the scheme. Please. Scheme size 1000 lakhs, face value per unit 10 rupees, investment in shares, that is equity scheme, market value of share is 2500 lakhs. Can I proceed? They also can calculate what? NAV. Write down first. Question number 4. Question number 4. Write down. Number of units is equal to. Question number 4. Number of units is equal to. The fund size is 1000 lakhs fund or not? 1000 lakhs. At what face value? 10. 1000 lakhs divided by 10 is equal to how many lakhs? 100 lakhs units. Number of units is equal to 100 lakhs units. NAV is equal to. Tell me this 1000 lakh fund is still 1000 lakhs are grown. With the operation how many lakhs there? 2500 lakhs. NAV is equal to current value of fund divided by current value of fund divided by units. Current value of fund divided by units is equal to 2500 lakhs divided by 100 lakhs. 2500 lakhs divided by 100 lakhs. What is NAV? 25 per unit. NAV is 25 per unit. One problem over, right or not? No. Please. Take question number 6. Take question number 6. Please. A mutual fund has made an issue of 10 lakhs, not 1 lakh here, 10 lakh units. 10 is less in the problem throughout. Okay. A mutual fund made an issue of 10 lakh units at 10 each. On 1st January 2008, it made the following investments. It is a practice manual sum. Okay. 50,000 equity shares of 100 each invested at 160, 8 lakhs. Okay, 10 is missing. Add 10 everywhere. Okay, 8 lakhs. 7%. Sorry, 80 lakhs. Add 10, 80 lakhs. Okay. Before changing, I said, okay, 7% government security, 8 lakhs. Debentures unlisted, 5 lakhs. Listed, 5 lakhs. Total is 98 lakhs. I started a fund, accepted 1 crore rupee, invested only what? 98 lakh. What is 2 lakhs here? Cash. It is kept as what? Liquid cash. Can I present or not? No. This was done at the beginning of the year, right or not? Now, during the year, 12 lakhs dividend were received on equity shares. Interest on all types of debts were received. At the end of the year, equity shares and debentures were quoted at 175% and 90% respectively. Other investments are at par. Find the NAV if the operating expenses during the year is 5 lakhs. Also find the NAV if the mutual fund distributed 0.80 as dividend. This is the question which has been given. Can you start or not? Now. Okay. We will do it together. It should not take more than another 5 minutes to complete. Can I start or not? No. We have target of 4 sum before that we don't leave. Can I proceed above? No. At least 3 minimum. Can I proceed above? WD idea. Can I proceed? No. 543 now. The problem. Now see. A fund was started by accepting 1 crore rupee. How much rupee is here? 1 crore rupee. As soon as I accepted the money from the investors, I allotted them how many units? 10 lakh units. And these money were invested in these securities and other details are given. Now they ask you to find out the year-end NAV. At the end of the year, what should be the NAV? What is NAV? The value of the fund divided by what? Number of units. Value of the fund includes what? Market value, all cash with it, minus what? All the amount paid by it. Can I proceed or not? Now, can I start with the solution together? Write down first. Cash in hand at the year end. Let's write together. Cash in hand at the year end. Cash in hand at the year end. Question number 6, step 1. Cash in hand at the year end. At year end. Okay, first, opening balance. When the fund started, it received 1 crore amount or not? Invest 98 gone, invested. What the opening cash? 2 lakhs. The fund started with the opening cash balance of 2 lakhs. It received what? Dividend. During the year, it received dividend on all its investments. Tell me what is the amount of dividend received? 12 lakhs. So the investments of the fund gave it a dividend of 12 lakhs. It also received what? Interest. Interest on all securities. If you want, below that in bracket, right? 7% into 8 lakhs. Now government security is giving 8 lakhs, 7% interest or not? 7% into 8 lakhs plus 9% into 5 lakhs plus 9% into 5 lakhs plus 10% into 5 lakhs. 7% into 8 lakhs plus 9% into 5 lakhs plus 10% into 5 lakhs. Tell me what is the interest received on securities? 1,51,000. Interest received is 1,51,000. 1,51,000. Respond, yes or no? No. All this money is available as cash or no? From this I made what? Expenses. Fund to operate will be having administration expenses, marketing, etc. Is or not? No. Minus operating expenses. In a fund should be having an office, will be having a fees to pay to the experts and so on. So the expenses operating incurred is how much rupees? Tell me. How much is that? 5 lakhs. Operating expenses is 5 lakhs. 5 lakhs. Okay. What is the closing cash balance? 10,51,000. Closing cash balance is 10,51,000. This is one of the asset of the fund. The value is the same number. So now because cash value is what? Same. Okay. 10,51,000. Can I proceed further or not? No. Next. Calculation of NAV. Step 2, calculation of NAV. Okay. Cash balance. At the end of the year, take the balance sheet of the mutual fund. It is going to have a cash how much rupees? 10,51,000. 10,51,000. Okay. 7% government security will be trading at what? Par. They have not given any other rate. Is trading at what? Par. How much rupees? 8 lakhs. Just we are totaling the totaling the balance sheet values. How much rupees? 8 lakhs. 9% debentures. Unlisted should be always valued at what? Par or fair, whichever is what? Less. We don't have the details regarding the fair value. I write as how much rupees here? 5 lakhs. 9% debentures, 5 lakhs. Next, equity shares. These are listed securities, unlisted are listed. Listed should be valued at par or current market price. Current market price. I bought at 160, now will be trading at 160 or more. It is how much percent? 175% of par value. How much rupees here? 175 rupees. Trading at 175 rupees. 50,000 into 175 gives how much? 87,50,000. This is the value of the equity share. Debentures, they are listed debentures. Once again, what value? Market value. Trading at 90% they said. So what is 90% of 5 lakhs? 4,50,000. 10% listed debentures, 4,50,000. 4,50,000. Everybody understanding it or not? No. Total assets. What are total assets? If I wind up the fund today. If I just close the fund today, I can realize how much asset? 1 crore 15 lakh 51,000. This is the value of the fund at the end of the year. So 1 crore 15 lakh 51,000. This value is shared by how many unit holders? Number of units 1 lakh. Sorry, number of units 10 lakhs. Number of units 10 lakhs. The number of units is 10 lakhs. What is the NAV? 11.55. The NAV is 11.55. The NAV 11.55. Everybody understanding it or not? Now. Next. Suppose during the year the fund declared 80 paise dividend. How much dividend? 80 paise dividend. Because it is earning some money or not? It has earned money from dividend, earned money from what? Interest, all this. After meeting, has some money in the hand or not? Now. They are going to pay how much dividend? 80 paise. What is the NAV? Can I put or not? Write down. Next. Step number 2 or 3 or 3. Step 3. NAV when? NAV when the fund declares 80 paise dividend. NAV when the fund declares 80 paise dividend. When the fund declares 80 paise dividend. Can I start or not? No. In the right first. Total assets before dividend. What was the total asset before dividend? 1 crore 15 lakh 51,000. Total assets before dividend 1 crore 15 lakhs 51,000. When the dividend is declared, still the asset will be so much or less or less. Why? Cash reduces. I don't minus cash paid as dividend. As cash paid as dividend. Bracketed 10 lakhs into 0.8. 10 lakh units getting 80 paise dividend. 10 lakhs into 0.8. What the cash paid as dividend? 8 lakhs. Cash paid as dividend 8 lakhs. That is total assets after dividend. Total asset after dividend. What total asset after dividend? Tell me the number. 1 crore 7 lakhs 15,000. 1 crore 7 lakh 15,000. 51,000. 1 crore 7 lakhs 51,000. 107 51,000. 1 crore 7 lakh 51,000. Next. NAV is equal to 107 41,000 divided by 10 lakhs. 107 41,000 divided by 10 lakhs is equal to how much? 10.75. NAV is equal to 10.75. 10.75. Simply, what happens here? Come dividend NAV is what? 11.55. My dividend is how much? 0.8. Yes, you 10.55. Is the answer for question number 6. Okay, now I think the time is up. Now, one day, one request here, please. Tuesday morning, can we start at 6 o'clock? I think MPV sir is starting at 6 o'clock. I heard. Yes or no? I also don't get sleep and all. Okay, I'll come here at 6 o'clock. Starting at what? 6 o'clock. We'll start on Tuesday morning. Okay, just 15 minutes can be made up there. And tomorrow, we don't have SFM class because FR, DT class are all there. We'll be having next class only on Tuesday.